Hello traders, you're welcome back to the Forex Geek channel. In this video, we're going to be looking at a simple CCI trading strategy for beginners. Okay, this strategy is going to help you understand market momentum and find high probability trade opportunities. Now, I'm just going to add the CCI indicator to the chart quickly. The CCI indicator is also, the long form is commodity channel index. The CCI is a short for commodity channel index. Okay, let me just increase the thickness. All right. Now, the CCI is actually an underrated yet powerful indicator that can help you identify trend strength, overbought and oversold conditions, and momentum shifts. Now, by the end of this video, you'll know exactly how to use CCI to make better trading decisions. So make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss a valuable trading strategy. Okay, let's just get started real quick. Now, before jumping into the strategy, let's quickly break down what the CCI indicator is and how it works. The commodity channel index is a momentum-based oscillator that measures how far the price has deviated from its historical average. Okay, now it moves above and below zero. You will notice that zero is the midpoint. Okay, it fluctuates between positive and negative territory. The standard levels to watch are plus 100 and minus 100. Okay, when the CCI is above plus 100, the asset is considered overbought, signaling potential weakness. When the CCI is below minus 100, the asset is considered oversold, indicating potential strength. But here's the key. Just because CCI reaches these levels does not mean you should immediately enter a trade, okay? We need confirmation from price action before making a move. Now, let's just quickly talk about the best CCI settings for beginners, okay? All right, now the default settings for the CCI is the 14 period, okay? It works well for most traders. However, depending on your trading style, you can tweak it. You can use the 7 period for more sensitive and short-term trading, okay? Then you can use the default 14 period for a balanced trading. It's best for swing trading, all right? Then you can use the 21 period for a smoother signal. If you want to get smoother signals and you want to reduce false alarms, you can use the 21 period. However, for this simple SCCI trading strategy, we're going to be sticking with the 14 period, the default, because it provides a good balance between responsiveness and accuracy. Now, let's just break down the step-by-step CCI trading strategy, okay? The first step is to identify overbought and oversold levels. Now, when the CCI moves above plus 100, you should be looking for potential selling opportunities, all right? And when the CCI drops below minus 100, you should be looking for potential buying opportunities. Secondly, ensure that you confirm with price action, all right? If the CCI crosses above plus 100, check if the price is hitting a resistance level or forming reversal patterns like double tops. Right, if you notice a double top pattern formation and you notice around that same period the CCI is giving you a signal for a sell, it could mean that the sell is likely going to prevail. Okay, so check out for these patterns. Check out for bearish engulfing patterns as well. Patterns that could confirm the signal given to you by the CCI. On the other hand, if the CCI drops below minus 100, check if the price is near support or forming bullish reversal patterns like pin bars or double bottoms. Okay, then the next step is to enter the trade and manage your risk. Okay, you can enter when the CCI, for a buy entry, when the CCI moves back above minus 100 and the price confirms a reversal. Okay, then you can go ahead to enter your buy trade. Then for the sell, when the CCI moves back below plus 100 with price confirmation, there should always be a price confirmation. You can go ahead to enter your sell. And for your stop loss, you can place your stop loss just below the recent swing low for a buy trade or just above the recent swing high for a sell trade. Then you take profit levels. For that, you can actually set your targets at support levels for a buy trade, or resistance levels for a buy trade. Use resistance. You can use resistance levels for a buy trade, but if it's a sell trade, you can use support levels, okay, to take your profits. All right. Now, a bonus tip: you can actually combine CCI with moving averages for even stronger trade confirmations. For example, if you want to get additional confirmations, you can actually add the CCI, the moving average. You can add the moving average to the chart. For example, we can see I added the 20 period EMA through the chart, and you will notice that when we had a sell signal from the CCI around here, you can see that the moving average confirmed it around here, adding validity to the signal. And here, when we had a buy signal from the CCI, you can see the moving average confirmed around here, adding validity to the signal. So basically, it's good. It is actually good to get confirmations from other indicators. Okay, it may not always necessarily be a moving average. Okay, you can use any other indicator of your choice. And in addition to that, watch out for candlestick patterns as well. Finding a bearish candlestick pattern around the resistance when the CCI is giving you a buy signal is even a much stronger signal. And then when you find a bullish candlestick pattern around a support zone when the CCI is giving you a buy signal, that becomes an even stronger signal. Okay, it's very important. Now, before we wrap up, let's go over some common mistakes that traders make when using the CCI. And one of them is entering trades just because CCI is overbought or oversold. It is important for you to always wait for price confirmation necessary. All right. Secondly, do not ignore the overall trend. Okay. If the market is in a strong uptrend, all right, if the market is in a strong uptrend, the CCI may stay overbought for a long time. For example, just see what happened here. The CCI entered overbought territory around here. You can see it for yourself. But notice that because this trend was still strong, you will see that the CCI was still hovering around the 100 level. Came down, went up, until the buy momentum was exhausted. So if you had exited your buy around here, or maybe you entered a sell around here just because the CCI was in overbought territory, you would have seen a significant pullback. So that's the reason why you must always get confirmation before you sell or before you buy. It is very important. And do not rely on the CCI alone. The best results come when you combine CCI with support and resistance, candlestick patterns, or moving averages. Okay, it is very important. And that is it. Now you know how to use this simple CCI trading strategy for beginners to improve your trade timing and accuracy. If you found this video helpful, make sure to hit that like button and subscribe for more trading strategies. Also, drop a comment below. Do you use CCI in your trading? What is your experience with it? Let us discuss in the comment section. In the meantime, keep learning, keep trading, and I will see you in the next video.